Hello all, welcome back to Turning Points, week 10 video in the series of part-time traders and investors hub. Yes, you are seeing right. You can give loan to Indian government and earn fixed income. This investment option is called bonds. Here we give loan to government and government pay us interest. Let's understand this quickly. We as investors give loan to government and government issues bonds in return, like this is the security that we are having, and periodically it also pays us interest. And if we compare the stock investment and the bond investments, also FD, a bond investment is having low risk and returns are moderate, and when we compare with FD, these are near to FD returns, I can say. And stock investments are always having high risk as well as high returns as well. Why bonds are having very low risk is because you might have already got it, like we are giving uh, loan to government, and if government is getting default, then there will be a high risk in any other investment options as well. So this is highly unlikely to happen. That's why this is having a low risk, and most of the time investors try to have some percentage of their portfolio into bonds as well along with the stock investments. And let's understand how many types of government securities are available. uh, in the central government securities, we have T-bills or treasury bills. These are short-term bills or short-term bonds which are having less than 1 year time period, so they have around uh, 91 days, 182 days and 364 days periods of uh, maturities. And government bonds or dated securities, they have more than 1 year period for maturity. So these are considered as long-term bonds as well. And similarly, state SDL development loans are also having long-term maturities, more than 1 year, sometimes 5 years, 10 years, even 30 years. And this is how the bonds and T-bills are listed in the brokers platform. These bonds are maintained by RBI, Reserve Bank of India, and monitored by SEBI. So you can place the orders from this place bid option, and you can also see the maturity period here. 2039 is the maturity year for this bond. And the T bills, you can see the 91 days, 182 or 364 days of T bills, and the interest that we can expect from these bonds. So almost every week we can see some T bills getting listed into our brokers platform, and every month some new bonds will be getting listed. So you can go to this option place bid, and the minimum investment for these bonds are 10,000. So you can only invest in multiples of 10,000. And one more advantage for these bonds are you can come and sell it anytime in the secondary market or from your broker's uh, platform. So you no need to always hold that bond till the end of the maturity period. So this is one more good option in terms of liquidity, that whenever you want, you can sell it. And let's see how the government securities are listed. So here you can see how to place the order. And government securities are having the prefix as GS, uh, and T bills. Anyway, you saw that T hyphen bills. So this is how you can place the orders, and you can invest into government securities or T bills. So that is about placing the orders or buying the bonds. And in terms of receiving the returns, so here we have a little bit of difference between the T bills and the government bonds, government securities. So in terms of T bills, the offer price will be lesser than the price where we are going to get the matured amount. So that difference will be the return that you are gaining here, or that is the profit that you are getting. Um, but that will be same amount that T-bill is proposing in the beginning itself. That's around 7 to 7.5%. And but in case of government securities or government bonds, for the long-term bonds, you will be getting regularly the interest credited into your bank accounts. So most of the times it is half yearly once. So, but at the end, you will be getting the same return what is mentioned in the bond description. That is also somewhere around 7 to 8%, in between 7 to 8%. So this is considered as one of the most popular investment option instead of FDs, because here you are getting more returns than FD when you consider the tax benefits as well. I hope you liked the video and see you next week.